A'udzubillahi minasyaitonirrajim. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I am Adil Zaini Bin Hamzah, and today I would like to talk about the application of Murabahah Contract in Islamic Banking Product. Financial field is an industry that needs to be recognized by every party in the world today. The financial industry plays a big role in running the economy smoothly and successfully. All of the business in the market, from the highest position as a mega businesses, semi or moderate scale businesses, and even small scale business are all benefited from the finance industry. These businesses raise their funds on starting their business mainly from taking loans and financing from the financial institutions. Therefore, we must realize that being part of a financial industry is vital to make and keep our economy in a stable condition. As a trader, the Islamic financial institution will purchase and undertake the asset or property that is needed by the customer with the customer's own specification in the Murabahah Contract. Then the Islamic financial institution will subsequently sell the asset or the property to the customer with full disclosure of the acquisition's cost and its profit margin. Normally, the Islamic financial institution would provide deferred payment and deferred settlement terms on the agreed selling price for the customer on facilitating the financing agreement through Murabahah Contract. Next, in the Murabahah transaction, the Islamic financial institution may undertake the asset or property through agent, and the agent regularly is the customer on behalf of the Islamic financial institution. Sharia law has emphasized the need for the seller on securing the ownership of the asset and assuming a risk that may be associated with the ownership of the asset or priority or property prior to the use of the Murabahah contract, regardless of the preceding undertaking that is there by the customer to purchase the asset or the property. The risk management team must have a good reading and mapping of the potential loss in executing the Murabahah contract on behalf of the Islamic financial institution, because there are possible losses and some cases has proven the risk arising associated with the asset or property in the world today. Next, what is the definition of Murabahah contract? Bank Negara Malaysia has given the definition towards Murabahah contract. It is stated in their report that Murabahah refers to a sale and purchase of an asset where the acquisition cost and the markup are disclosed to the purchaser. Based on the definition given in the Investopedia, Murabahah contract also referred to as cost plus financing. Is the structure in Islamic finance which the seller and the purchaser have agreed to a fixed amount consists of cost price and markup price or the profit margin. In the acquisition of an asset or the property, the markup profit margin is the substitute of the interest on loan, because interest is categorized as riba or usury, but profit margin is halal or permissible by the Islamic law. There are a few steps in the transaction of the Murabahah contract. Firstly, the Islamic financial institution or the Sharia banks made a negotiation with the customer on what asset or property that the customer wants to buy. The second process is the Islamic financial institution or the Sharia banks purchasing the object or the asset with the specification given by the customer. Thirdly, the Murabahah contract has been made and set by the Islamic financial institution that includes the cost price and the markup price in the Murabahah contract. Fourthly, the customer then visits the supplier to proceed with the purchase. Fifthly, the customer receives the object or the asset and the papers from the supplier. And lastly, the customer pays the bank installments as agreed by both parties. Some parties has argued that this is just another method of giving loan with interest. Statement like this is surely and purely wrong. It is because the difference lies in the structure written in the Murabahah contract. To make it clear again, in the Murabahah contract of sale, the Islamic financial institution buys the asset or property, then sells the asset or property back to the client with a profit charge. This type of transaction is valid or halal in Sharia law because it does not include any prohibited elements in Islam in the contract of Murabaha. Let's talk about the components of the Murabaha contract. The Murabaha contract is a valid or a halal contract, and it is a simple transaction that does not require a lot of components to make the contract successful. The first component and the most crucial component that needs to be in the Murabaha contract are the seller or the Islamic financial institution, and also the purchaser or the buyer, the customer. In making the Murabaha contract acceptable, the parties involved are the persons indeedly need to be perfectly legitimate and shall have legitimacy and legal capacity to get into or entering the process of Murabaha contract. From the Sharia perspective, the legal capacity of a person is defined as a capacity to assume rights and responsibilities and the capacity to give legal effect to his action. Moreover, in the Murabaha contract, the next component is the contracting parties may be a natural person or a legal person. One of the parties or any party can enter into the Murabaha contract through an agent. Naturally, a contract needs the agreement and understanding between both parties. Furthermore, besides the components that have been stated above, the asset or the property involved is also one of the components of Murabaha. There are a few conditions to be met by the asset to be traded in the Murabaha contract, and the contract must be Sharia compliant, it must be valuable, identifiable, and also deliverable. The other component in Murabahah Contract is the ownership of Murabahah Contract must be transferred from the seller or the Islamic financial institution to the purchaser or the buyer, the customer, smoothly. If the sale and purchase are supported by evidence of the transaction, the transfer of ownership is effected upon entering into a valid state of sale and purchase, even if there are no legal registration yet. The possession of the asset or the property must be in a physical state of possession, or called hakiki, or in a constructive possession called hukmi. The seller may defer the registration of the asset or property in the name of the purchaser until a full settlement on the selling price has been made. The last component of the Murabahah contract is the price. The price amount or even the type of currency involved must be agreed by both parties when entering into the Murabahah contract. The price should be set up that consists of cost price and the addition of markup price or profit margin at the time of entering the Murabahah contract. These expenses include valid expenses which are established by customary business practices of uruf tijari. Next, what is the legitimacy of the Murabahah contract? The legitimacy of the Murabahah contract is from the sale or the albay, and based on the sale concept in general. There are 4 sources of jurisprudence in Islam that support the legitimacy of the contract of Murabaha. The sources are the Al-Quran, the Sunnah of Rasulullah sallallahu alaihi wasallam, and the concern of majority of the Muslim jurists or ijma', and lastly from the analogy or the qiyas. In the Al-Quran, in Surah Al-Baqarah, verse number 275, it is stated there that Allah subhanahu wa ta'ala has permitted trade and has prohibited riba or usury. A'udzu billahi minasyaitonir rajim. Bismillahirrahmanirrahim. Alladzina ya'kuluna ar-riba la yaqumuna illa kama yaqumu allazi yatakhabbathu syaitan minal mas zalika bi annahum qalu innamal bay'u mislur riba wa ahalla Allah kul bay'a wa harrama riba faman ja'ahu maw'izatun min rabbih fantaha falahu ma salafa wa amruhu ila Allah wa man 'ada fa ulaika ashabun nar hum fiha khalidun. With the translation, those who devour usury will not stand except as stand one whom the evil one by his touch hath driven to madness. That is because they say trade is like usury, but Allah has permitted trade and forbidden usury. Those who, after receiving direction from their Lord, deceased shall be pardoned. For the past, their case is for Allah to judge. But those who repeat the offense are companions of the fire. They will abide therein forever. Surah Al-Baqarah, verse number 275. Another source of the legitimacy for the Murabahah contract is the Sunnah of Rasulullah sallallahu alaihi wasallam. from Rifa'ah ibn Rafi', he said that Rasulullah sallallahu alaihi wasallam was asked about the best job, and his reply was a job that is done by one's own hand, and every decent trade. The hadith is narrated by Bazar and established as valid hadith by Al-Hakim. In another hadith, Rasulullah sallallahu alaihi wasallam also permitted the sale of a commodity for more than its purchase price. If the two commodities are different, buy and sell as you wish. The hadith is narrated by Muslim in Sahih Muslim. Next, the legitimacy is from the ijma'. It is deduced by the consent of the majority of Muslim jurists or Jumhur al-Fuqaha that the Murabahah contract is legitimate. For instance, Imam al-Kasani pointed out that this kind of transaction that people adopted these types of sale or Murabaha and other sales throughout the age without the denial or the objection. Last but not least, the source of income to get the Murabahah contract legitimate is the qiyas. The Murabahah contract is analogous to another type of sale. As an example, tawliya sale, sale at cost price. This type of sale is likewise with Murabahah contract and is also legitimate. The most important thing to highlight is that both the sales, whether the Murabahah contract or the tawliya sale, need to disclose or reveal the cost price to the purchaser transparently and in the best manner. Next subtopic is the application of the Murabahah contract in Islamic banking product. The Murabahah contract is the most used contract in sales and transaction, and is the most commonly used financial contract served by the Islamic financial institution. There are ways which a Murabahah contract can be applied in today's Islamic banking. As stated earlier, the Murabahah contract is the most popular contract used in the sale transaction. The types of Murabahah application in Islamic banking products are reverse Murabaha, good Murabaha, commodity Murabaha, and also al-bay' bisamin ajil or BBA. Firstly, the reverse Murabaha. Reverse Murabaha contract is mainly used in an investment product. The contract runs when the customer sells to the bank at a certain price and additional markup. The Islamic financial institution will firstly sell the commodity to the customer and getting money from the sales transaction at Y price, for example. Then the Islamic financial institution will buy back the commodities from the customer in a deferred sale for Y price plus the additional markup or the profit margin. Secondly, the goods Murabaha. In goods Murabaha, the customer will ask the Islamic financial institution to purchase goods for them and will be signing a promise that they will buy the goods from the Islamic financial institution after. Then the Islamic bank will purchase the good from the vendor and sell it immediately to the customer with a declared markup for profit. Thirdly, the commodity Murabaha is one of the variations in Murabahah contract provided by the Islamic financial institution. Commodity Murabaha is quite similar to cash generating banking product. The customer normally will seek an Islamic financial institution for fund of cash, let's say in amount of X. The Islamic financial institution will sell a certain amount of commodities with X price plus the additional markup. The payment will be made on a deferred payment basis. Then the customer would usually appoint the same Islamic financial institution as an agent to resell the same commodity at a price X on the spot payment basis and raise the money wanted by the customer. This contract system, also known as organized tawarruk. Fourthly, the deferred payment sale or al-bay' lisamin ajil. This contract of sale will only require two parties. The Islamic financial institution will sell an asset to the customer or purchase the deferred payment basis with an additional markup. Then the bank will buy it back from the customer at once at the cost price. This kind of contract is largely practiced in the region of Southeast Asia and is controversial in some parts of the Muslim world. Okay, in Malaysia, there are a lot of products in Islamic banking financial institution that utilizing the Murabahah contract. One of them is in the retail banking of Murabahah contract. In Murabahah retail banking, there are home financing, car financing, goods financing, and others using the Murabahah contract. Investment product in retail Murabahah also using reverse Murabahah. Personal financing usually using the tawarruk or the commodity Murabahah. For example, Maybank Islamic has used the commodity Murabaha in financing a house. Based on the Sharia principle of Murabaha, or the cost plus profit, where the Islamic financial institution, in this case Maybank Islamic Bank, provides financing via the trade of identified halal commodity such as crude palm oil. Furthermore, there is Murabahah contract in corporate banking. Murabahah contract in corporate banking is mainly offered to the mega companies that run mega or large businesses, such as the construction or property financing, the equipment financing, and even working capital financing. Reverse Murabahah is one of the types of Murabahah contract used by the corporate banking for investment product. This contract have been offered in Bank Muamalat Malaysia Berhad to finance working capital. They provided Murabahah Working Capital Financing I or MWCFI. Okay, and next, the other product produced by the Islamic financial institution through Murabahah contract is in Sukuk al-Murabahah. Sukuk is a certificate that depicts the equal values of shares ownership. Sukuk normally involves in the acquisition of the tangible asset, the usufruct, and also services. The seller of the Murabahah commodity is also the issuer of the sukuk, and the subscriber of the sukuk is the buyer or the purchaser of the commodity. The owner of the commodity is the Murabahah sukuk certificate holder and is also entitled to the commodity's sale price. Last but not least, to conclude, the Murabahah contract is one of the most used sale contract in the Islamic banking world. Majority of Islamic financial institutions have Murabahah sale contract in their products. It shows that the Murabahah contract is really relevant and needs to be enhanced for future knowledge in the Islamic financial institution products served in this country. Based on the situation of the Murabahah contract, its application in the Islamic banking products, I believe that the improvement of the Islamic financial system is going to be better year by year. And that is all from me. Thank you for lending me your ears. Assalamualaikum warahmatullahi wabarakatuh.